Netflix stock was up double digits on the day following its earnings report. So let's get right into what caused investors to get excited about Netflix stock right now. The headline, of course, was that it ended its streak of subscriber losses, right? Two straight quarters of subscriber losses ended in this quarter when Netflix reported an increase of 2.4 million subscribers. That was better than the 1 million it forecasted to receive, so 1.4 million ahead of forecast. Overall revenue increased by 5.9% to 7.9 billion in the third quarter, which ended September 30th. Um, the majority of the new subscribers were added from the Asia Pacific region. Only 100,000 were added from the United States and Canada. That market is becoming saturated with many, many users already signing up, and those that would like to sign up have already signed up, and there isn't any room available, or there isn't much room available for growth in that region. Most of the growth in the future years is going to come from outside of the US. But let me touch back on the subscriber growth because, in the last two quarters, Netflix had lost 1.2 million subscribers, 1 million in the most recent quarter and 200,000 in the quarter before that. And that was really the first time that Netflix had reported subscriber losses for more than a decade since the beginnings of its streaming services. And that was a result of a number of factors, namely the reversal of the trend from when we were staying home more often. The demand for in-home entertainment soared, and Netflix got millions and millions of signups between 2020 2021, and so it kind of front loaded all of those subscriber gains, and now it's experiencing some churn from that, right? So, out of the 20 million people that subscribed, some of them are going to cancel their subscriptions, and so there's going to be more losses than the new additions that they're bringing in. And so on net, that was leading to losses overall. Of course, it also didn't help that a number of competitors entered the fray. Disney Plus, Paramount Plus, Peacock, HBO Max all emphasized and doubled down on their streaming services during the pandemic. So that was another challenge for Netflix because consumers now have choice on where they wanted to subscribe to. And, sometimes they would switch between the few competitors, maybe pause the Netflix subscription for a month and then move on to the other one. And so those headwinds were causing Netflix growth to slow down. The good news is that those losses ended in this quarter. And so investors can breathe a sigh of relief and say, okay, at least this trend is not going to continue. At least we turned this thing around. We added 2.4 million subs in this quarter, and management is forecasting 4.4 million subscribers in the next quarter. So, an acceleration of subscriber growth in the fourth quarter. So, that's great news, right? Not only did they end the streak, they added 2 million, better than expected, and they're also forecasting an acceleration of that growth to 4 million. Right, so we can begin to see why investors were enthused about the results, and the stock was up over 12% on the day after the report, and namely because of this factor. The risks for investing in Netflix were rising with that streak continuing, right? If this would have been another quarter of losses, then investors may have projected continuing losses over the next few quarters. But now Netflix says this is not going to be something that continues over the next few years where we're just losing subscribers every quarter. We're going to return to growth. And so that was the big headline. This is not a company that's going to start going backwards. It's actually now returning to growth. So that was a major sigh of relief that caused the stock to soar. All right, earnings per share were down to $3.10 from $3.19 in the same quarter last year. Not a significant decrease, better than investors were fearing. And then investors have something to look forward to with the launch of Netflix's ad supported version in November. So customers are going to be able to buy an ad supported Netflix for a lower price than the basic version. and that could help keep some subscribers that are more cost conscious. And also, remember I noted earlier, most of their growth is going to come from international segments that tend to have the population in those regions tend to have a lower per capita income, and so price is a major consideration for folks in that region. Having a lower priced ad supported version could help entice new customers to join and also keep existing customers that may be, if they're on the more expensive tier, they can downgrade to the ad supported tier instead of canceling altogether. And then finally, starting with the next quarter, Netflix is going to stop forecasting subscriber guidance. They're just going to focus on forecasting revenue and profit guidance, and they're not going to look at subscribers specifically anymore. That could reduce some of the volatility in the stock when earnings are released, but it could also increase the risks because investors will now have to more or less guess what their subscriber figures are going to look like in the next quarter, because management's not going to give you that estimate of where they think it's going to be. So in net, that could be an increase in risk for investing in Netflix stock because that's less information available for investors. All right, so Netflix has been one of the stocks that was high on my buy recommendation list. I had recommended the stock as a buy, and this earnings report certainly increases my enthusiasm for recommending Netflix stock as a buy. Reversing this trend of losses was great news. Forecasting more subscriber growth in the next few quarters was also good news. And the fact that it reported more than expected subscriber gains, right? 2.4 million instead of 1 million, were all positive signs for Netflix. And I would still I would still recommend Netflix stock as a buy, even more so after this report. Okay, so thanks for tuning in. That's all I've got for Netflix earnings review. I'll see you next time for another stock update. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of September 21, 2022, and measured against the S&P 500 returns of 112% as of September 21, 2022.